Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. With 2025 come to a close, let's take a few moments to review the past year and make a few observations for the history books. In the futures markets, news gets priced in almost immediately, so a lot can happen in a day. And from December 31st, 2024 to December 31st, 2025, there were 252 trading days for the market to work through. The Bloomberg Commodity Index closed out 2025 at $109.69, which was roughly 11% above a year ago, and traded a range between down 2% and up 14% across the calendar year. The index is comprised of a basket of goods, which goes beyond just agricultural production and also includes energy and metals. So, while the commodity index was pointed mostly higher last year, there was a lot of volatility across individual markets, which gets smoothed out. In fact, an index weighted toward grains would have returned negative values in 2025, while a commodity index only buying cattle would have outperformed an index weighted in energies, especially depending on your timing in the market. Nearly 15% of the Bloomberg index in 2025 was weighted toward gold, which closed the year up 64%, keeping upward pressure on the commodity index all year round. Precious metals dominated the list of index performers, with copper in third place overall, finding an annual gain of 41%, despite a lot of volatility around the spot futures. The most dramatic performer in 2025 turned out to be silver, which began slightly outpacing gold by midsummer and caught an explosive rally in the fourth quarter to end the year up 266%. One of the next most volatile spot markets in 2025 belonged to natural gas. Trading from January 1st, spot natural gas futures found a full range between a 25% annual decline and a 46% increase. The spot gas futures contract switched to February for the last 3 days of the calendar year, crashing the spot value back to within 1% of a year ago. Without this correction, natural gas futures would have likely ranked fourth in terms of the best commodity performers in 2025, instead of finding the fifth spot behind feeder cattle. Spot feeder cattle finished 2025 up 33% year over year, compared to live cattle, which ended the year up 19.4%. For most of the first half of the year, feeders and live cattle gained at roughly an even rate. On April 1st, live cattle gained 7.8% and feeders were up 9.6%. With the extensions of the border closure with Mexico, the gap between feeders and live cattle performance widened drastically. At their peaks this fall, feeders had climbed up 44% year over year, while live cattle found price growth around 25%. Cash to cash, 2025 average fed cattle prices brought 20% higher prices than a year ago, and feeder weight cattle were 28% higher for an 8 weight. News from the border aside, lower corn values also helped feeders find an edge over fed cattle last year. Spot corn futures finished the year down 3.9%, but for a period in the third quarter were down as much as 14%. Let that serve as a good reminder as we enter the new year. The timing of your risk management is equally as important as the quality of your forecast. Thanks for watching. Remember to visit CattleFax.com, become a member, see the latest market news and analysis.